The latest sentiment survey showing the pessimism among individual investors continues to remain above average for the 15th consecutive week. Bullish sentiment is below its historical average. Joining us now for more on what investors are eyeing is J.J. Vix Kinahan, CEO of IG North America. It's just always something that we talk about, maybe even more important this time with the sell-off in the VIX. And after our 18 months of kind of a trading range, which followed a pretty big decline, we never got a capitulation reading on the VIX. And we still have almost gone back into bull market territory. What does that all indicate to you?
It's really amazing, that you see a VIX below 15 here, Joe. And I think one of the things that could be saying is I think the market's seeing sort of smooth sailing, if you will, through July 4th. And the reason I say that is a couple of things. Number one, if you think about the two things that kept VIX elevated, it was debt ceiling and the Fed. Well, debt ceiling passed. The Fed right now, there's about just over a 75% probability that they're going to do nothing at this meeting. Earnings season is by and large over. And one of the interesting things is that as we head to the end of the quarter, we have quadruple witching next week. Then we have the end of the quarter. I think a lot of money managers are probably underperformed. So there may be some pressure to start buying things as we head there. So I think that's exactly what I see when I look at the VIX, although it also makes me a little bit nervous, if you will, that there's a sense of, everything is just okay. And I think that reading that came out that you introduced the segment with is interesting because when I talk to, our retail investors, there's this sense of contradiction, I'll say it that way. And the fact that great news today, terrible news tomorrow, everyone's having a little bit of trouble committing. So that's also part of it.
And there's complacency in the VIX, but not a lot of bullishness among what we just said among investors.
No, there really isn't, which, we can continue. Actually, and I look at our clients' activity, which I think is really interesting. So far this week, our clients have actually started to sell the QQQs, or buy puts in it, or sell it, or get rid of their longs, which to me is really interesting. It's had obviously an incredible run, but it's more of short term for the QQQs. It's the next week or so that people are buying the puts for. So it's not a long term. I think this is terrible. And, you guys talk about, the magnificent 7 stocks, et cetera. You look beyond that, the rest of the market hasn't actually done much. So because of that, I think people are saying if we can't get the support, financials kicked in a little the last couple of days, but if we can't get that support, the market, may have a rough week, but longer term, as I said, I think through July 4th, it looks like things.
Do you think that we go to new highs in the averages from here without the VIX ever having indicated a bottom? Or are we still in a trading range with some ultimate bottoms still ahead of us? And when people like Druckenmiller say, look, we had, these are 40-year highs in inflation. We had 10 years of zero interest rates. We had a lot of things that could indicate we could be in a period where we don't get those above average returns for 5 years, for 10 years. So are we still, could we be in a 5-year trading range where we don't go to new highs?
We could be. I think one of the other interesting things that people don't consider enough is, everyone's like, people are going to go to fixed income. People are going to go to fixed income. Think about people, many of them under the age of 40, who are out buying fixed income, many of them for the first time. It's the first asset that they bought that's actually lost some value in a long time. So you think about it. Stocks, when they bought them, went pretty well for them overall, went up. Real estate's done pretty well for people. So this is the first time, I think, in many years where people are seeing assets come down. And so for many people, I think the equity market, although they may not be adding to positions, for many people is still the best game in town.
AI is good or bad for the market overall?
I think the market has actually done AI. So think about all these large trading firms every single day. They're taking in every tick, every second, every trade, every bid, every offer. And so in as many ways, I think if you look at programmatic trading that many firms do all day long, it's been a form of AI. I actually think if you look at the markets, it's been an adopter of AI in many senses before the rest of the world. So is it good or bad for the markets? I think, of course, it's going to be overall good. The bad part about any new technology is initially it tends to cost some people jobs, and then longer term, it builds jobs. So that's the part that makes me a little bit nervous as we're heading into a rougher economy right now anyways, and we're seeing layoffs. So in the shorter term, as I think AI becomes more widespread, that it may cost some jobs in the shorter term. You don't like, I mean, I just walked by the McDonald's here right down the street.
Yeah.
You walk in, there's 2 or 3 people only at the counter. Everything's electronic. I was just looking in there, and I'm like, there's no one hardly working at those places anymore.
You were just looking in.
I was just,
okay.
I'm sure I'm going to eat on the way home.
All right. How about the Magnificent Seven? Is that a positive sign for the markets? That these
it would be a
have...
positive sign if we can get something else going behind it.
So really you need
something else.
Broader participation.
I think it's financials, to be honest with you. I think the problem with financials is until the Fed is clear cut that they're done, you're going to see this inverted yield curve, and it's certainly not as bad as it was, but until you start to get a normalized yield curve, it's really tough for the financials to sort of come out and play, if you will.